Hello, and I'm back from London, and I'll tell you about that momentarily. But welcome to Matters Financial and Geopolitical from Frontier. Let's start with some macro thoughts. In September 2016, I was writing about the risks in the bond market, and I said if volatility spikes, positions are going to be reduced en masse. Or to put it another way, and to borrow the lyrics from the Eagles Hotel California, I was talking about how people were hemmed in and would all go to head for the exit at the same time and not be able to check out. And that is the point Jamie at Reuters made. The panic in Italian bonds is the latest example of what happens when low vol trades blow up and volatility soars. And in February this year, I wrote about this as well under the title Halcyon Days. Home thoughts. I was reading the New Yorker on my flight back from London this morning, and there's a lovely article about Philip Roth. And David Remnick says, the meaning of life is that it stops. He was quoting Kafka, and then Philip Roth, you tasted it, isn't that enough? Of what do you ever get more than a taste? That's all we're given in life, that's all we're given of life, a taste, there is no more. And then anything can happen to anyone, but it usually doesn't, except when it does. I visited Paris during the week, and this is a photograph of the Gare du Nord. And as we were coming back, there was an unattended baggage on the platform, and we all had to troop out and then troop in again. And then over the weekend, I went to the Cotswolds for the wedding of my old school friend Alex Michaelis. And this is a photograph of the view from our bedroom. And it really is a green and pleasant land at this time of year. Political reflections, great quote on Trump's appeal. The press takes him literally, but not seriously. His supporters take him seriously, but not literally. That's from Ronak Gopaldas. We're meeting with the chairman on June the 12th, and I think it's probably going to be a very successful, ultimately, a successful process, Trump has said. Kim Chol presented Trump with a letter from the North Korean leader Kim Jong-un as the US hailed real progress towards holding a landmark summit on June the 12th. Sergey Lavrov visited Kim Jong-un in Pyongyang ahead of that visit to America by Kim Chol. So we've really seen developments on this front. It seems that President Trump is extremely keen on snaffling up a Nobel Prize on this front, but ultimately what needs to be threaded in terms of the needle is what to do with the denuclearization of the peninsula, and I'm not sure Kim Jong-un is ready to take that step yet. Very interesting article in Asian Times Online. Ports in a storm stealthily expand China's naval presence. Behind the maze of shipping superhighways stretching from the Indian Ocean to the South China Sea and beyond the Pacific will be a network of ports, at least 15 to be precise, dotted around strategically vital regions and crucial to China's grandiose $8 trillion Belt and Road Initiative. The full scale of the project, which arcs from Yemen to the Maldives, Sri Lanka, Pakistan and Bangladesh, while crisscrossing the South China Sea through Cambodia, Myanmar, Indonesia, Malaysia, Singapore, and even the Philippines, has immense ramifications. At the core of this coastal development drive is the vital shipping artery of the Straits of Malacca and Beijing's move to secure key waterways. Almost 80% of China's imported oil passed through the Indian Ocean and the Malacca Strait into the South China Sea in 2016. Beijing believes itself vulnerable to foreign interdiction of vital energy supply lines. A 2015 article from a journal run by China's University of International Relations, a feeder school for China's intelligence agencies, expressed a similar idea. The author of the article described a concept of first civilian, later military, the report said. Under this paradigm, commercial ports would be built with the goal of slowly developing them into strategic support points that can assist China in defending maritime channel security and grasping key waterways. These claims are regularly dismissed by Beijing, insisting the new Silk Roads are grounded in economic development which will benefit countries involved in the Belt and Road project. August last year, I wrote a piece about China rising. This was looking at its geopolitical advance. And then in August 2013, I said, I have no doubt that the Indian Ocean is set to regain its glory days, in large part because of the fact that so much energy flows through that Indian Ocean's Malacca Strait, South China Sea waterway. International markets, let's take a look at the currency markets. Euro dollar 116.84, dollar index 94, Japanese yen 109.67, Swiss franc 0.9877, the pound 133.63. The Australian dollar is at 0.7617, Indian rupee 67.015, South Korean won 1071.08. The rial is at 376.34. Egyptian pound 17.9250. The South African rand is at 1264.38. The dollar index hit my target of 94.50. It's now trading around the 94 level, but I am sidelined for now. Euro dollar 116.84. I'm still looking for a breakdown to 114.50. The FANG index has broken out to a new high. This is from Bespoke Invest. Facebook, Apple, Amazon, and Netflix all closed at new record highs. They've been on a relentless bull run for quite a while. Facebook, which plunged 10% in March amid a backlash about how it handled user data, rose 1.2% on Friday to close at a record $193.99. The stocks surged 12% in May for its best monthly performance in almost a year. Analysts expect the rally to continue. The average price target of $222.18 implies an additional 15% upside for the stock. Apple, Netflix, and Amazon also notched milestones on Friday as tech led the broader market gains. Amazon has been in uncharted territory for more than a week as the shares extended a 7-day winning streak. The 10-member NYSE FANG index also closed at a record. So really it's very much the internet, the new economy that's leading the charge. Gold last trading at 1291.50. We haven't been able to cross 1300. Brent crude, this chart is from Chol, as you can see we topped out a few weeks ago. And we're continuing to look for support. Emerging markets, India looking good as things stand. It's the world's fastest growing major economy. That's from David Inglis. And I still believe, as I did in May, that we have all the ingredients here for making a good old-fashioned crisis in the emerging markets. May wasn't really about what one would have wished for in terms of stock market performance. Frontier markets had a very tough time. You'll see that from where the African stock indices are at the moment. Argentina and Vietnam especially hit, and Africa followed suit with Ghana and Egypt in particular. Maybe June will provide more sunshine. The state of emergency is about to be lifted in Ethiopia. It's an important and welcome step by the Ethiopian government, and it was communicated by the Prime Minister's Chief of Staff. But more interesting than that is an article in the FT. China scales back investment in Ethiopia in the face of rising FX shortages and government debt, highlighting the fragility of the African nation's economy as the new Prime Minister prioritizes political reform to quell 3 years of deadly social unrest. For much of the last decade, Ethiopia has been a leading investment destination in sub-Saharan Africa, particularly for China. But Beijing's waning enthusiasm for the region's fastest growing economy reflects the challenges facing Abiy Ahmed, the Prime Minister, as he juggles demands from a public hungry for both democracy and development and myriad vested interests. Business people, diplomats and bankers said Chinese entities which have loaned more than $13 billion between 2006 and 2015 for everything from roads and railways to industrial parks were now taking a more cautious approach to Ethiopia. The Chinese have said they've reached their limit. One diplomat in Addis Ababa said, "We're way overextended here," they told us openly. Two investors said that Sinosure, China's main state-owned export and credit insurance company, was no longer extending credit insurance to Chinese banks for projects in Ethiopia as willingly as it used to. There's a new reluctance to back investments in Ethiopia. One investor said it's not completely clear why, but it appears they're worried about the debt profile and forex crisis. The reluctance comes as some flagship Chinese finance projects, such as freight rail services from Addis Ababa to Djibouti, are running below the expected capacity. They're running below the expected capacity all across the one road, one rail panorama. Added to concerns about foreign exchange are anxieties about the country's rising debt. Earlier this year, the IMF raised Ethiopia's risk of debt distress to high. Government debt now stands at 59% of GDP, up from 46.8% for 4 years ago, after the government borrowed heavily to invest in infrastructure and industrial parks. Analysts say this is a medium to long-term solution because exports of goods, while growing at 14% annually, only account for 3.6% of GDP. Zemedene Negatu, a prominent Ethiopian businessman, said interim sources of forex should be explored to bridge the gap until exports increase in the medium term. Exports should be promoted and the banking sector consolidated. Mr. Abiy should also look into the establishment of capital markets. Mr. Zemedene said, Ethiopia is the largest economy of its size anywhere in the world which doesn't have an organized and regulated stock market. And then this quote caught my attention. The moment people are over with the political excitement, the economic reality is going to bite, and bite hard. Ethiopia is also planning to build a navy, and they are landlocked effectively. Remittance inflows from outside and within Africa rose on average from $38.4 billion 2005 to 2007 to $64.9 billion 2014 to 2016, and remittances very much are a silver bullet for the continent. In 2017, 19 million international migrants moved within Africa, 17 million Africans left the continent. Top intra-African migration destinations: South Africa, Cote d'Ivoire, Uganda, Nigeria, Ethiopia. Debt spike threatens reserves. This is Zambia via the Africa Confidential. The uncontrolled borrowing by the Lungu Circle is growing too large to cover up. Having said it was certain of its figures, Zambia's Ministry of Finance has once again revised its external debt upwards from $8.7 billion to $9.1 billion. While its debt continues to rise, international reserves have fallen to just $1.8 billion, and the kwacha is beginning to totter. Africa is building a $3 trillion free trade agreement with the US and China trying to outdo each other with import tariffs, and the UK wants to break away from the European Union. African leaders are working on a free trade agreement that will cover a whole continent. Intra-African trade currently stands at about 16% of the continent's total, compared with 19% in Latin America and 51% in Asia. Of course, the two largest economies, Nigeria and South Africa, have yet to sign this free trade protocol. South African all shares down 3.74% this year. Dollar versus rand has softened to 12.6438. Egyptian pound is at 17.9250. A squad of Egyptian Air Force planes perform a show above the parliament in Cairo during the swearing in of President Abdel Fattah al-Sisi. Nigeria's stocks had a well-beating start to the year. Now they're running out of steam. That's from Bloomberg Africa. The Nigeria all shares down 3.73% this year. Ghana suffered their first monthly fall since September, tumbling more than 8% in May. That index is up 23.75% year to date. Kenya is trucking its first oil to the Mombasa port. Have a look at this infographic from the Daily Nation. The Central Bank of Kenya became aware of the National Treasury Commissioned Financial Markets Conduct Bill after it was uploaded to the Treasury website 2 weeks ago. This is not the time for hubris, it is the time for action, not to mistake. CBK is under attack. There are summons to act with courage to defend and strengthen, reviving our hope in a common vision for a modern CBK at the heart of a vibrant financial system. As I said severally, this is a rogue piece of legislation out of the Treasury. Kenya's proposed company tax rate will exceed all others in East Africa. It's not going to fly. It's a thoroughly bad idea. Dr. Njoroge also said, we do not have headroom for more borrowing. We can borrow in case of emergency, but not for roads or any other project. The Big Four spending splurge pushes Kenya to bet on tax hikes. Kenya's government is betting that a raft of proposed tax increases somehow won't scare off investors in East Africa's biggest economy. It certainly will. Looking to introduce a new top bracket for income tax and will also lift the rate for companies with an annual income of more than $4.9 million to 35%, the highest of the region. And Vimal Shah said, we're in a competition with the world for investments. We're not an island. Some proposals will make Kenya the least attractive. You can say that again. Without being financially accountable, government can expect significant pushback from the private sector because the latter will get no benefits for taxes imposed by the former. That's NZSA. Interesting headlines about the possible merger of Kenya Airways and Kenya Airports Authority. Kenya Airways is seeking to run the airports in a rescue deal with the KAA. I met with Michael a few weeks ago. This was part of his strategy to bring Kenya Airways back from the brink. Private sector credit growth grew by 2.8% in April, up from 2.1% in February. That's via Cyton. Kenyan inflation remains subdued. Take a look at this chart. Nairobi all shares up a meager 0.78% after tumbling 12.23% since setting a record high on April 5th. Armed Cement's auditors are worried about the survival of the company after losses increased from 2 billion to 6.5 billion. Current liabilities exceed current assets by over 13 billion, according to that article. NSE 20 is down 10.2% year to date. The variance in core earnings per share growth was due to the faster increase in operating expenses, which was driven by an increase in loan loss provisioning. This is Standard Chartered, who took the entire provision in one go. NSE 20 is minus 10.2% year to date. I've done an interview with Benson a couple of weeks ago of Britam and one with George Odo, who's the senior partner at African Invest. Take a look at those two if you have the time. And once again, good to be back. Thank you for stopping by as always.